My name's Olivia Williams. I'm the Events and Training Manager at the Hereford and Worcester Chamber of Commerce. Really pleased to welcome so many of you to our third seminar with Bishop Fleming this afternoon, and would like to give special thanks to Chris and to Wendy, who are joining us from Bishop Fleming as well. Just a little bit of a run through of how this webinar is going to be structured. Hopefully you can all see on your screens a chat function. It's called Zoom Group Chat. That is the area where you can submit any of your questions to our speakers. So once I've handed over to them, if there's at any point any questions can be raised by anybody, pop them in that group chat function. Myself or one of the speakers will see that, and then we will try and answer your questions as best we can. As I said, we've got Chris and we've got Wendy, so if you've got a specific question for one of them, please just let us know who you're addressing the question to. For anyone that hasn't figured out the Zoom group chat part, I'll just quickly walk you through that. If you hover over your screen, you should get a menu bar at the bottom, lots of different buttons on, including things like share screen, mute yourself, stop your video. There is one on there which says chat. If you click on that, in the bottom right hand corner you should get a little chat function, and again, just for those that have just joined, the chat function is how we will facilitate any questions for this afternoon's seminar. So without further ado then, I'm going to hand over to Wendy to begin with. You are all on mute, just so that we can keep it really focused to our two speakers. So I'll hand over to Wendy now and unmute her, and then we will hear from Chris afterwards. Okay, Wendy, I'll hand over to you. Thank you.
Thanks very much, Liz. Thank you. Hopefully everyone can hear and see me okay. So the plan is to start this afternoon by talking about the deferral of VAT payments, which was announced by the Chancellor last week. Obviously quite a big boost for businesses who usually pay VAT. So I thought I'd just talk through exactly how that's going to be working in practice and some of the details. The basic principle is all VAT that would have been payable by businesses that was due for payment between the 20th of March, that was the date of the announcement, and the 30th of June this year can be deferred. And HMRC have confirmed now that those payments will be deferred until the 31st of March 2021, so a fairly long period. And basically, for most businesses who file quarterly VAT returns, it'll defer the payment of one VAT return payment. So, for example, if you had a VAT return period that ended in February 2020, that would have been due for payment on the 7th, that payment will be deferred until 2021. And similarly for March return periods and April return periods. It's actually a slightly better deal for any businesses who are big enough to be making VAT payments on account, because those payments are actually made monthly, and the length of the deferment period means that actually 4 payments on account or 3 payments on account and a balancing payment will all be deferred. So a sort of bigger proportion of VAT for large businesses being deferred. One thing important to remember, and that's if you usually pay your VAT by direct debit, you will need to cancel that direct debit with your bank, because I don't think HMRC have quite got themselves organised well enough to be sure that they won't take the VAT. So you need to be cancelling your direct debits. You still need, even though you don't need to make the payments, you still need to remember to file your VAT returns on time, obviously, so that HMRC can see what's going on, see how much you're going to have to pay them in a year's time. Any VAT returns which are repayment claims or any refunds of VAT, HMRC will still make to you. So if you're a repayment business putting in monthly returns and claiming VAT back, you'll still get that back from HMRC. If you're waiting for any other refunds of VAT from HMRC, you should still get that too. And HMRC have confirmed that some businesses who do annual accounting and only make one payment a year, if that payment was due during this period, that will also be deferred until March 2021. And the other piece of VAT news just to report, which is sort of hot off the press and currently not actually confirmed by HMRC, is that with regard to making tax digital for VAT, the requirement to have digital links throughout your accounting system was due to come into effect on the 1st of April, tomorrow. HMRC have now also deferred that for another year until the 1st of April 2021. So I think those were the main things I wanted to cover. I don't know if anyone's got any questions.
Anyone got any questions for Wendy at this stage about anything she's talked through so far? If you have, pop them in the group chat part. If not, everyone's gone shy. Okay, we can move on to Chris, if you're happy, Wendy.
Yeah, that's fine. Thank you.
Okay.
Afternoon, everybody. As I'm talking, no doubt some people might start thinking about VAT questions, so keep firing those in, and then between Wendy and I, we can get through all the questions towards the end. I've got the unenviable task of picking up all the other bullets on the COVID-19 support for business programme. Wendy got VAT, I'm sweeping up everything else. So there is a fighting chance that some questions will be asked today that I don't know the answers to, but this afternoon is a great opportunity to capture those questions, and we can add those to the Bishop Fleming Knowledge Hub, which you can find at bishopfleming.co.uk. So there's no such thing as a stupid question, but there's probably plenty I won't be able to answer. What is that other support that's out there apart from the VAT measures that Wendy's just mentioned? Of course, got the talked about coronavirus job retention scheme, with the first time many of us will have ever heard the word furlough. Hot on the heels of that came the self-employment income support scheme to cover off all of those that were looking enviously at the furloughing arrangement and realising that they were self-employed and it didn't apply to them. A number of statutory sick pay reliefs, and then very, very powerfully the business rates regime. We've seen the business rate system used for the first time ever as a grant mechanism to not only facilitate a reduction or in fact 100% relief in some instances on business rates, but for some businesses in the expanded retail sector, including leisure and hospitality, for those with a rateable value below 51,000, they will be seeing a grant come back their way of either £10,000 or £25,000, depending on their rateable value, in addition to rates holidays going forward. Allied to that, we have the coronavirus business interruption loan scheme. So that's for SMEs. SMEs in this context defined as trading companies with turnover not exceeding 45 million. That's a contentious issue, and I'm sure we'll come back to that. But they can access loans of up to £5 million. And because they're 80% underwritten by the government, there is a greater chance, we would hope, that the 40 or so lenders that are providing those loans are more likely to vote yes on the loan than no. Other attractions there include 0% interest for 12 months, no arrangement fees, and theoretically no need for personal guarantees or security, but again that's a bit of a bone of contention at the moment. No doubt we'll come back to that. So there is a broad church of arrangements out there. That cliche, the devil in the detail, has never been more omnipresent in this environment, with all of these fantastic regimes coming in, but not a broad church on the government websites or any other websites for that matter. It's caused a few issues and wrinkles that we've already been lobbying Robin Walker about, including the turnover base for CIBILs, the impact on R&D tax credits, to mention a few. So that's a bit of a high-level overview of the sorts of areas that we can talk about this afternoon, and Wendy's done VAT. I can see that we've had some questions coming. So, and Wendy, do you want to pick up the first one, because that looks like a VAT?
Yeah, sure. Yeah, can do. Yeah, so Penny, on the question about a late registration, depends slightly on timing. With a late registration, you typically get a very long VAT or a long VAT return, which covers the period from the date of registration up to a current date, and then a month to pay that VAT. If the payment date for that first long VAT return, if that payment date falls between the 20th of March and the 20th of March and the 30th of June this year, then I think it does qualify to be deferred, because the HMRC notice doesn't specify. It says all VAT payments, but if the payment date had fallen before the 20th of March, it would still need to be paid. Although the thing I should have added, if businesses have VAT which was due before the 20th of March, but which they're having problems with paying, there is also an HMRC coronavirus helpline where you can ask for time to pay other tax amounts that aren't covered by the deferral.
Okay, so we've got a question underneath that. Can quarterly NI PAYE payments to HMRC be deferred? There isn't a formal, unlike the self-assessment where the July self-assessment payment can be deferred to January, the deferral system is more informal for NAY and PAYE. I keep getting a message here, by the way, Olivia, that my internet connection's unstable, so chuck something at the video screen if you can't hear me. The best way to manage your payment schedule with HMRC, aside from that 31 July deferral on self-assessment, is actually to contact HMRC helpline. There is a new number for the HMRC deferred payment time to pay arrangement helpline. So I think at the end of this, we can somehow publicise that new number. But the take-home message has got to be good proactive engagement with HMRC. They are being very, very flexible. We're not seeing any problems. They've resourced up a new department with over 2,000 people in it to manage the time to pay arrangements. All we're seeing so far is flexibility, but for those that can actually get through at the moment. So we got another one, which is a payroll one, which I must admit fits in the category of I'm not going to be able to answer all of the questions here. So we've got a question: all HMRC references imply monthly payroll. I have pubs that have been doing weekly payrolls. Is it likely to cause a problem with the claim? Are you talking about what are we talking about there? We're talking about furlough under the job retention scheme. Right, furloughing claim, yeah, okay. So the way that furloughing is working, and I'm still waiting for the detail to come out on that, is that a grant is payable back to the employer, and there's going to be a new portal for that. So far, I've not seen details of how that portal will work. As soon as we've got that, we'll make sure that gets uploaded on the usual channels. Next question, BT surveyors. Regarding the 80% underwritten, does this still need to be paid back? So I'm assuming this is a reference to the coronavirus business interruption loan scheme, where 80% of the debt is underwritten by the government. That is a support for the lender, not for the borrower. So the borrower is still obliged to repay the debt in full. If the borrower goes bust and is unable to do that, then the bank can then fall back to the government to call on that 80% guarantee. They would still be exposed for the 20%, but the SME that's borrowing the money is still obliged to make good 100% payment, unless of course they become insolvent. Okay, so what have we got here? Retail premises in London are... does this mean we qualify for business rates relief at our head office workshop as well as in London? Yeah, well, the good news is there are two aspects to the business rates. There's the grant, which I mentioned earlier, with £10,000 for rateable values below 15,000 and 25,000 for those businesses that have a rateable value between 15,000 and 51,000. In those instances, you can only have one property. You're only allowed to trade from one property and have one property benefit. So if you've got more than one property, you are precluded from claiming. However, should between the 11th of March, your application, which should be automatic, although a number of the channels allow you to register. So if you go, just as a sidebar there, if you go onto the One Worcestershire website, there's a great resource there that signposts you to all of the different district councils. You can reach out and, where necessary, register for the grant. Should your circumstances change such that you find yourself with a second property, the government have told the councils not to come after taxpayers because they've suddenly found themselves in a situation where once they were eligible, they no longer are during a transitional period. For everybody else, and including those people, there will be a 100% relief for those operating in the retail. It's called the expanded retail sector. The expanded retail discount is called, and it's called expanded for two reasons. One, because it's now incorporating leisure and hospitality, and the definition of retail, leisure and hospitality is drawn very widely. And also expanded because it was supposed to be a discounted regime for last year. It's now been carried forward into 2021 with a discount of 100%. And that discount applies to every property. So there is no one property cap on that, it's every property. But you need to check with each district council, each local authority's area that you operate in, because HM government have devolved the power, the administration and the decision making to the local councils. So whilst there is a uniform approach in terms of government guidelines, local implementation may differ. So hopefully that answers that one. Banks appear to be pushing in-house loan products instead of government COVID-19 initiative and standing by guarantees. Are you seeing this? Well, I am conscious that I believe that we might have some people on from banks here, but I shall press on regardless. I need to be careful how I say this, but as ever, and we acknowledged this when we were lobbying Robin Walker on this point, the government have brought out in what, in my opinion, are some great regimes that have been rushed out very quickly to keep the economy going. The best way to survive an economic crisis like this is to keep money flowing through the economy, and we can see that all of these initiatives are designed to do that. As ever with funding regimes that involve loans, government obviously understandably turns to the banking sector to deploy them because they have the infrastructure and the know-how to do it. I have sympathy with the banks because ultimately they're having to make risk decisions and implement a new regime with little guidance as to how it's going to work. It's loosely based on the enterprise finance guarantee, but it's only loose. The key metric around being an SME is that your turnover is under £45 million. But we've lobbied Robin Walker to say, well, the problem is that if you look at historic periods for companies that were over £45 million turnover, their turnover now may be zero because of COVID-19. So exactly the sorts of businesses that need help may not get it. A classic example of the nuances that we're still trying to get clarity on. What are we seeing from the banks? We are seeing understandable reticence and confusion because there's a lack of guidance. We are also seeing them go through the normal process, which is if a client comes to them and says, I need funding, the first step should not be CIBILs, but it should actually be what support can that bank provide to their customer. So it's not necessarily the right thing to go straight into CIBILs. It's possible that the bank will talk to the business and say, actually, we can extend your overdraft facility, or it might be better to have a term loan. That kind of financing product is better for your business. I think, as an aside, far too many businesses use an overdraft to finance their working capital when their business model probably commands something a little bit more sophisticated. So it's not a foregone conclusion that you need to go into CIBILs. It might be just good engagement with the bank. Banks are very quickly playing catch up in terms of how CIBILs are going to work. We've seen differing aspects, notably in the context of security. So loans at £250,000, banks are within their rights to do an unsecured lend. Above £250,000, a bank would understandably start to look for security. can still provide a loan without security above £150,000 without recall, without any issues from government. But what you have to remember is that all of these loans are basically normal commercial loans. The requirement is the bank, whether it be Lloyds or Lloyds, has to appraise every lending decision as a normal commercial lending decision. Do we think that with this loan, this business will be able to trade through COVID-19, come out the other side and repay that? Which is why in a number of cases, we're actually seeing the banks sending in panel advisors to do independent banking reviews. Disappointingly, some of the banks are saying personal guarantees from directors and shareholders. We don't think that's in the spirit of the regime. Some banks are now backtracking on that. We've lobbied Robin Walker to say this isn't the spirit of thing. If you've got business owners desperately need funding, the rules say that funding cannot be secured in personal private property. You cannot put your own home up. Then in the same breath, you're being asked to give a personal guarantee. That doesn't seem to be in the spirit of things. But I think there's a salutary tale here also, which is we have clients that are really keen to help, banks that are really keen to help their clients. Where they're being slightly more reticent is possibly where that banking relationship has gone a little bit sour, because the business has not engaged positively with the bank and has maybe taken too much advantage of overdraft facilities. It's agreed overdraft facilities with the bank and then pushed it a bit too much. Now the bank is understandably being a little bit more reserved. So good. I think the take-home messages are good proactive engagement with your bank. There are other banks out there. There are platforms like Capitalise that can step in as one of those 40+ providers if your bank is being a bit intractable.
Thanks, Chris. Just wanted to check where I've got a bit lost. Where have you got up to on the questions then, just to make sure everyone's get answered?
We are down to, before I lose my voice, we are down to Emma Finch saying, what is your overall take on the so-called government guarantee 0% interest? This is not what we are getting from the bank at all. Well, that's interesting. Of course, if your bank talking to you and saying what we can do for you is, and the product they come to the table with is just an extension of your overdraft or a new commercial loan, a term loan or invoice finance, that will carry interest. Unless, of course, it's a CIBIL's loan. If it's actually a loan arranged through CIBIL's, then it will be 0 interest for 12 months. So if it's a CIBIL's loan, it has to be 0% for 12 months with no arrangement fee. I'd be disappointed if this was an example of the bank selling it as a CIBIL's loan, but it's not, and charging interest. So that's an interesting point. Be interesting to know more about that. Okay. Wendy, I've got one. There's one for you from SS.
Okay. Yeah. Sorry, on Making Tax Digital, I should probably have been a bit clearer. During 2019, yes, Making Tax Digital for VAT was introduced for all VAT registered businesses over the turnover threshold, starting either from the 1st of April or the 1st of October. This year was really the second wave of requirements. Everyone's now filing their VAT returns using Making Tax Digital. This year there was due to be a change to a stricter requirement for all the links within your VAT accounting process needing to be digital, and that was proving quite challenging for a number of businesses. That was due to come in either from the 1st of April this year or the 1st of October, depending when you started last year. But that's now all been moved forward, and now all businesses will need to have their full digital links in place from the 1st of April 2021. So it's just that additional new requirement from this year that's been moved to next year.
Okay, thanks, Wendy. 0 hours stuff, again, that's a good niche question. That I think what I'll do with Livia is make sure that we capture some of these, get them answered and put them up on our knowledge hub, because it's a very good question. coming back to HMRC are rolling out urgently a new portal for the calculations, the applications, and the way this works. We haven't seen that yet, so exactly how that's going to work, I don't know.
Okay, are we up to date on all the questions?
We are, yeah.
I think so. Okay, Chris, did you want to carry on, and we might end up with a few more questions with any? Oh, we just. That's the one from Penny. Okay.
Right. Okay. I tell you what we'll do, Penny, is that we will. Penny, have you got a way that you can get your contact details to Olivia? And we will get somebody to contact you. Right, get your contact details to Olivia, and after this, we'll reach out and get somebody to talk to you to give you whatever guidance we can tee up after this call. As I said at the start, I had the unenviable task of covering off all the other bullet points, and I haven't got all the answers.
Yeah, that's great. Thanks, Chris. You've had a big question.
Okay. Oh, it's Mr. Cole. But if April.
Just for the recording, I'm just going to read it aloud, just so that if anybody comes to view this again, they can sort of see what you're actually answering. So Lloyds won't ask for PG for loans under 250k on CIBILs, but if are able and prepared to lend on normal commercial terms, including using security in place, then they can't turn to CIBILs. It is there for when a viable business doesn't have security to offer, and they understand that it can be perceived as penalising those with assets, but as Chris has already said, in what he's saying, either way, it would need to be paid back. Another question.
The implication there, am I? Yeah.
Yeah, you're on.
The implication there, Andrew, is that Lloyds are, and that's what we've seen, asking for personal guarantees for loans above 250,000 on CIBILs. I don't know whether that's still the policy. I know other banks have backed away from that, but it'd be useful to understand what the current thinking is around that.
Okay. And another question from Emma.
Are we actively lobbying the government to put pressure on the banks to stop them putting up interest rates on overdrafts? No, we're not, but we have a corporate and restructuring team that has been lobbying government on a number of things, so we can certainly add that to the list.
Okay, thanks, Chris. Has anyone else got any other questions for Wendy or for Chris? Chris, is there anything else you wanted to cover specifically just while we've got a bit of a break from questions?
No, just probably one other area that people probably be aware of. We do a lot of work with innovative businesses on R&D tax credits. At this time, they represent a fantastic opportunity for businesses to inject cash into the business very, very quickly. There have been some issues that programs like CIBIL's, the self-employed employment income scheme and the corona job related scheme are state aid. They're notified state. They are theoretically incompatible with R&D tax credits, because you've got two notifiable state aid regimes butting up against each other. We had some concern that businesses that were looking to claim R&D tax credits, and rightly so, would suddenly find themselves in a position where accessing important funding could jeopardise their R&D tax credits. We're sure that this isn't what Parliament intended when they were trying to get this thing out. So we've lobbied government. The Treasury are looking at it at the moment. My advice to any businesses that aren't claiming R&D tax credits is that they should look to claim them if they can. For those of you that are claiming R&D tax credits and are concerned at all that arranging a CIBILS loan or taking advantage of one of these other business support mechanisms might have an impact on your R&D tax credit claim, the most important thing you can do is make sure that your business is solvent. So take advantage of these regimes. And if you're worried about the R&D tax credit, please talk to one of the Bishop Fleming team, and we can walk you through that. My sense is it'll be okay, but it's good to be alive to these things. So that's that on R&D tax credits.
And you've had one question just in
Will
the
all the
chat.
development work on ventilators and ventilators part count towards R&D tax credits? I suspect they will on a number of levels, because there'll be two areas in which they will. We've obviously got existing technology that, obviously as a technology it exists, we have a thing called ventilators, but most R&D tax credit claims sit in the space of something already exists and we make it better. And that can, of course, include process. So what we are seeing is new type of ventilators being developed that don't require the patient to be intubated. Intubation is a horrible process that requires sedation, because basically you need to stick a metal tube that looks like a cattle prod down somebody's throat. It's quite graphic. With the new ventilator technology that's been developed in association with Mercedes, that's not needed, and therefore it represents an evolution in the technology. Similarly, JCB are helping to manufacture some of the component parts, but they're having to do that on manufacturing lines that weren't originally designed to do that. Therefore, they're having to evolve their process. So they're having to innovate materially their process to create these parts. So I would expect to see R&D tax credit qualifying activity presenting across most of those ventilator part manufacturing processes. And then we've had another one. Furloughing is grant provided to employers subject to repayment at a point in time. It is a grant. It's not repayable. This is a grant. So by definition, a grant, the money comes to the employer, goes out to the employee, and it's not repayable. My only concern with the way I understand the portal system is going to work is the money will end up with the employer, then bounce to the employee. Don't think at this stage it's going to go directly. My fear is that employees might not see the money if the company goes bust, but that's one to keep an eye on.
Thanks, Chris. Has anyone else got any other questions or anything they'd like any more information on from either Wendy or from Chris? Anything you'd like to just start a discussion about? Anything you're unsure of?
Yes, the furlough grant is supposed to be coming in, I believe it is April, but the self-employment income scheme is going to be paid as a one-off lump sum. We've not really talked about the self-employment regime much today, but that's going to be paid as a one-off grant. That will probably be in May. And I'm assuming that the furlough starts in April and then be paid on a monthly basis, whereas the self-employment income support scheme will be paid as one lump sum in May.
Thanks, Chris. Is there anything else you can tell the group about what's been announced for self-employed?
Yes, so for self-employed, similar to furlough, where the employees get 80% of the, the employer gets 80% of the employment costs up to $2,500 per calendar month. Similarly, for the self-employment income support scheme, again, it's 80%, but in this sense, it's 80% of trading profits, but with the same cap of £2,500 per calendar month for 3 months. There are a number of criteria. You need to have filed a self-assessment tax return for the year ended April 19. If you've not filed a tax return for that period, you're deemed to be outside of the scheme. That's an anti-avoidance tactic. But if you have been trading in that period and you've yet to file a tax return for that self-assessment period, they have extended the deadline to submit a tax return to evidence that you did have self-employment income. That deadline's been extended to the 23rd of April this year. You needed to have also traded in the year ended April 20 and continue to trade or be endeavouring to continue to trade irrespective of COVID-19 in the year that we're just going into. If you're intending to trade but you have lost trading profits because of COVID-19, then you might be eligible for the self-employment support. What are the financial thresholds? As I said, the maximum is $2,500 per calendar month, and you need to evidence that your trading profits are less than £50,000, and that more than 50% of your taxable income comes from self-employment. How do we assess the trading profits at the 50,000 level? We look at, there are 3 different scenarios that you look at. If you meet either of any of these, then you're in, which is if your self-assessment, self-employed income was less than £50,000 in the year ended April 19, with more than 50% of your total income coming from self-employment income. Or if you've been trading in the year ended April 17, 18, 19, averaged over those 3 periods, if you're below 50k and above the 50%, or if you've only started trading relatively recently, say back in 2018, then HMRC will average the shorter periods. But ostensibly, it's benefiting self-employed people whose majority of their income comes from self-employment, and their trading profits are less than £50,000. We would read trading profits not to be the profit that you've declared in your accounts, but the trading profit as adjusted for tax, because HMRC will be looking at your tax return to assess whether you're eligible.
I'm just going to pick up on one of the questions from Sue, which is once the furlough portal has been set up, is it possible to have a dedicated seminar around this, how this will work? Yes, absolutely. Once it is set up, we can absolutely do that. In that meantime, though, I am literally just in the process of organising another employment law / HR seminar with our employment law specialist, Sally Morris from MFG. She did one on Thursday for about an hour and a half, and the main topic ended up being furlough. So based on that kind of demand and the fact that everybody still needs a bit of information around this scheme in particular, I'm looking to set up another seminar based on furlough with her probably at the early part of next week. So just to answer that, make sure you keep an eye out for that one. And yes, we will do another one. Couple of questions for you, Chris.
So we have got, where is it? We presume I think Faye Hanks has said, we presume HMRC will contact us with regard to self-employment relief. No, they will not. At this stage, the plan is that you have to apply, and you can't apply yet. So the process for application isn't there yet. I don't think the system to be applying or not, and obviously it's one of the tests is that your trading has been impacted by COVID, which is demonstrable from the impact on your profits. Well, you'll have to make a declaration that's the case, and they wouldn't be able to work that out from the information that they've got. So at this stage, as we understand it, you can apply, but HM government are already stating that you can't apply yet. I suspect that will come later in April, and then if you then successfully get into it, you'll have a one-off lump sum paid probably in May, probably June. Actually, if you work through the maths on it, it will probably be June when it's paid, because June will be the third of the 3 months that this applies to, assuming it's not extended beyond that point.
I'm just going to pick up the one from Sandy as well, just because I think talking about employees who have been furloughed, but they're wanting to stay busy, so can they basically do some voluntary work as it isn't linked to generating revenue for the business? I would join the HR seminar that we're going to do next week with Sally again, because I do think that would need to be put to her as a very good question, which I'm sure a lot of people have got similar questions around that. But Sandy, I would say
I can say actually, Olivia, I can answer that question.
Okay.
If you are not allowed to do the work that the duties that you would normally undertake for your employer, you are not permitted to do whilst furloughed. What you are able to do is study and training, if you so wish, but there's no obligation on the employer to do that, but they are permitted to do that. They can do voluntary work. I suppose the thing that employers should really be talking to their employees about is if you want to do voluntary work, that's great, but we must all be mindful of government guidance about staying at home. So stir crazy it's probably good for, not good mentally, but it's a necessary evil that all of us, an evil that we all have to suffer.
Thank you, Chris. Anyone else got any other questions for either of our speakers? Yeah, you've got another one there. I think that'll be to you, Chris.
Is the New Start ESA? I've not heard of that. Is the New Start if you've only been self-employed for, yes, because if you've been, you need to have been self-employed and filing a self-assessment tax return in the year ended 5th of April 19. Their fear is that because of the way you declare income, self-employment income on a tax return, is that people could argue that they were trading retrospectively when they weren't, just to get into the self-employment income support scheme. So you needed, in order to get into self-employment income, you needed to be submitting a tax return year ended 5th of April 19.
Okay, thank you. Another one from Penny about being director of their own company on payroll.
Well, there's an interesting employment law piece there, because I think what Penny's saying is that you're not permitted to do duties related to the job whilst furloughed. As an employee, furloughing employs to employees. It doesn't apply to directors, because directors aren't employees. Directors are paid through the payroll, but they're not actually employees. In order to be an employee, they need to be on a contract that designates them as an employee. Again, that's one for the HR seminar. I'm a tax lawyer and a forensic expert, so I shouldn't really be giving legal advice, but I think in terms of the concepts, one to watch there. Can they get their accounts up to date while claiming furlough? Well, I suppose if you've got an employee or a director that wants to do some stuff relating to their duties, who's going to know about it? Obviously, the spirit of the thing is that people don't do that. I think it's more important that employers aren't furloughing their employees and then telling them to carry on as normal.
Okay. I think last opportunity for any questions then, as I think we're nearing the end of our seminar, unless there's anything left from you, Chris, or you, Wendy.
No, I'm conscious there's been a number of really interesting questions there, and some of which that we've either not been able to answer because we're not alive to the detail, or that or we just don't know because the guidance hasn't come out yet. But I think really important that we capture those, make sure that we've got some scripted questions to all of those and get them uploaded to the chamber and our knowledge hubs. It's been a really useful trawl through live issues for business and business owners.
Sue, just to answer your question about the HR seminar, I haven't confirmed the date yet, sorry. I'm hoping it will be next Monday, but as soon as it is announced, we will put it on the Chamber's LinkedIn and on my LinkedIn as well. So yeah, I'm hoping it will be Monday the 6th is when I'm trying to get it booked in for, because I know people have got a lot of questions still about furlough, especially with the new legislation that's been released. Chris, another one.
I just think Jeremy's asked the question there, which is allied to, he's citing the Daily Telegraph at the weekend, saying that a company with one director and base salary and dividends, etc., is outside of the furlough scheme. I suspect the Telegraph, I've not seen the article, but I suspect the Telegraph are probably alluding to the legal concept that I touched on, where there is an assumption that a director is an employee and they're not, and this applies to employees.
Okay. Final chance for any questions then. Nothing more from Wendy. Chris, any? Okay, thank you, Sandy. Any final comments from yourself, Chris? Otherwise, I think we can sign off.
Nope.
Okay, thank you. If anyone has got any questions, or you think of any over the sort of next 24 hours that you didn't kind of manage to get across today, then send them to the following email address, and I will get them sent over to either Chris or to Wendy to make contact. If you email events@hwchamber.co.uk, if you've got any other questions, or if you want to be hooked up with, connected to either Chris or Wendy, I'm happy to share all of that information. Just wanted to say a huge thank you. Yeah.
Olivia, are you capturing all the questions that are in the chat box? Have you captured all of those?
Yeah, we've been taking some pictures of them, so we've got a record of all of those. Yeah, no problem.
Brilliant. High tech.
Yeah, absolutely. I haven't quite figured that out yet. Yeah, so we've got a record of everyone's questions. The email address, actually, perhaps I will just write it in the chat then, so everybody can see it. So that's the email address. If you've got any other questions, or like I said, if you want to be introduced to either Chris or to Wendy, then just drop us an email, and we'll do our best to help you. We've got another seminar for all those who are interested taking place tomorrow with DRPG. That's going to be at midday tomorrow, 12 o'clock. There is a link on our LinkedIn page, the Hereford and Worcester Chamber of Commerce LinkedIn page, to get onto that one tomorrow. Dale, the CEO at DRPG, is going to be talking about best practice and best ways to communicate using virtual technology with, firstly, your employees, and also importantly your client base as well. So just a little bit about how we can all utilise this technology that's now becoming apparent we all need to use a little bit more. So if you do want to come to that seminar, then please do join us at 12 o'clock tomorrow. A big thank you from me to both of our speakers from Bishop Fleming today. Really appreciate your time, sharing all of your knowledge and your wisdom. So thank you very much. Thank you, Sandy, and thank you to everybody there for joining us this afternoon. I hope you found it really useful, and if there's anything else we can help with, then please do get in touch. But hope you have a lovely rest of the afternoon. Thanks all.
Thanks.
Thanks, Olivia.
Thanks.